What's up, gang? Zach here from the Trading Network. I hope you guys are doing well and that your trading week is off to a good start. Mine certainly is. I kept it short and sweet today. Only took 3 trades. 2 of them were within the first 5 minutes or so of the open, and then took my last trade on actually a different account closer to the close today. But I just wanted to quickly show you guys this journaling software that I'm using, because I think that trade journaling and really treating this like a true profession in regards to taking data and taking valuable information from that data, from your technical data, is extremely, extremely important. So you can see here, I've got my trades. You can see the ticker. We've got the side, how many contracts, net P&L. We have a calendar here, and this is kind of just the individual page for this trading day. So if I go to the dashboard, you can see that this is my entire month of October. Only one losing month on these accounts that I'm showing right now. And we will get back into this current trading day. So I'll show you guys this very, very briefly. You can go into your trades. You can upload a screenshot of your trades. You can grade your trades with a star rating. You can create different hashtags for different setups. For example, this is going to be an opportunity zone long trade, which most of you guys are probably familiar with if you have watched my other scalping videos. You can shuffle through your trades, again, grade them, and add different tags. You can even add tags for mistakes. So chase, didn't cut losses quickly, FOMO, not in the plan, shorting on a bullish bar, early entry, closed too quickly, all sorts of stuff. And a lot of this stuff is already built in, which is pretty nifty. So as you'll see today, only took 3 trades, and 2 of them were right off the open. Took a break, went to the gym, came back, saw another setup, closed a quick scalp for another $425, and then called it a day. So let us dive into the actual trade breakdown here, and we will discuss this opportunity zone setup. So before we dig in here, you can see that I hit record late on this, but I want to break down my entry, and you can see that we are clearly in an uptrend, right? We've barely even tested the opportunity zone upon the open of the New York session today. And I came to my computer, and of course that we had this massive move in the overnight. You can see over here, this is a 10,000 tick right here. So we had a huge push up, and we opened up, and we essentially continued the trend. We had an open drive profile open type, which is the highest directional conviction profile open type for those not familiar. So when I see that we open with an open drive, typically, I will say this, I like to go to the gym and work out before I start trading. And I did not go to the gym before I saw this, but because it was such a high probability setup, because we had an open drive, because we had directional conviction throughout the entire overnight session, I decided, hey, if I see this setup and I don't take it, that's an error in my system. So I got in for 2 contracts on NQ, and you'll see that I only entered 1 on ES, and basically just allowed the trade to play out. So when I enter an opportunity zone trade such as this, most important thing with any trade really is understanding where I'm going to put my stop loss, where my technical invalidation point is, and where the level is that the trade is no longer valid. When we get into an op zone trade, typically it's going to be invalidated when we break the 50 exponential moving average. And that is this green moving average that we see right here. You can also see that we had the day's current point of control right there inside the op zone as well. So not only do I have great protection from the opportunity zone itself, being, the zone between the 21 and the 50, I also have the opening range high. You guys can see it right there. And I also have the point of control from the current session. So that is multiple levels of protection for my stop loss. And the more protection you have, the more it's going to take to push price down into your stop. So in a nutshell, that just means that this gives me immense confidence in this trade, and that I should not falter whatsoever. I should not worry, because if we break the 50, we're also breaking the opening range high, the POC, and the trade's likely invalid, and we're on to the next one. However, this one worked out swimmingly. So I'm going to click play here, and it's going to be pretty simple. So you can see that I'm taking profit right around the current value area high, the current high for the session. So I pop one off there, and I leave my last contract. You see I have 1 left here. I leave that one on to continue to see if it will move up towards this R1 level. Now, typically when I am in a trade like this, I am looking for example, if I'm in a long trade, a long trending trade, I'm looking for either a local high, which we got right here, which is one reason why I pulled some profit. And I'm also looking for a local high and then a lower high, right? So that is going to be what we call the 3-step shift. When you are in a directional move in an uptrend, in this example, and you see a high put in and then a higher high, that'll give you bearish divergence in most instances. That's going to be a trap for most traders. A lot of traders are going to see bearish divergence in an uptrend. They're going to get short and they're going to get stopped out almost instantly because it's not time and we don't have enough indication that the trend is ending, right? And I'm going on a bit of a tangent here, but I want to give some context. So what I look for to exit is either going to be a local top if I'm trying to play it, you know, a little safer, or I'm looking for a local top with bearish divergence and then a lower high. And that typically signals the end of the trend. And if you're not already long, that can actually give you some great short opportunity. So let's click play here and we'll let the rest of this play out. And you can see that I'm basically just waiting for the candlestick structure to close. And that was my second exited contract, right? So to be exceptionally clear here, when we have a candlestick like this purple bar close below the low of the prior bar, that's a local top. Now, of course, we had one right here, but we also were bouncing off of that current point of control. So I continue to hold the trade. And as we know, unless or until the op zone gets violated, it's probably fine. It's likely a good trade and it's not invalidated yet. So I let price continue to move in the direction of my trade. And I took one contract on the first local top after we had gotten above this second upper deviation of VWAP. And then I took my second contract in when we put in our second local top. And this is not a lower high, just to be clear here. And it could be argued that we have a little bit of bear div maybe, but that's really not what I was paying attention to. I was paying attention to these local tops getting formed as we get closer to these major areas. So you can see that we have a zone between the current value high and the high of the day, which was just made right before I took profit. And we have R1 right above that. So the closer that we get to major levels like Fibonacci pivots, market profile levels, etc., the likelihood increases that we're going to get some pushback, right? And I would much rather take profit here than let price come all the way back down to the bottom of the op zone, because that's likely going to be another opportunity for me to enter long. So I took both of my contracts in. You can see I basically had an average entry of 11,045-ish. I took my first contract off at 11,066 and a quarter, and I took my second contract off at 11,079. So over 30 points on that second contract and about 20 points on that first contract. Now, as I click play and we continue to go over, you can see that I will move over to my ES chart. Very, very similar setup here, right? You can see that ES is respecting the op zone. We are clearly in an uptrend, making higher highs and higher lows, generally speaking. And I got to the computer and I saw this. I saw that we had bearish divergence here, like I was just talking about. And my thought was, if this is going to continue, this is likely going to be a great trap for retail traders. And what I mean by that is what I mentioned just a moment ago. Retail traders, most know enough to make themselves get into sticky situations. We'll put it like that, right? Most learn enough to be dangerous to themselves, right? So we have bearish divergence, and most people, you know, they watch a couple YouTube videos and they're like, oh, that's bearish divergence, isn't it? We're supposed to short here. Not in an uptrend, but I take advantage of that. How I take advantage of that is I know that if a lot of retailers are getting short on this bear div and we don't have a lower high, they're likely going to have a stop loss right here. I actually missed this entry and entered a little bit late right at the prior high. So my thought was, if this trade idea is going to work out, I have great protection, once again, from the opportunity zone itself and the current POC over here on ES. And there's likely that we have a lot of stop losses above this area. Sure, I could have waited for a pullback and entered here, but I decided to enter here, get my stop set, and allow the trade to play out. So one of the main things, or the main reason that I wanted to make this video, obviously, you know, the trade worked out while I had NQ up, and I just, let them both play out and was keeping an eye on both because I have multiple monitors. But the main idea here isn't really for you guys to watch this trade play out, because there's not a lot to gather from just watching me enter and then watching, price move in my direction until I take profit. Same exact management, trade management wise, when it comes to both of these trades. I started to pull contracts and I only had one on ES, so I pulled it when we put in a local top as close as possible to these current market profile levels. So I was able to get about 8 points, 8.25 on ES with one contract, and then I locked in about between 20 and 30 with two contracts on NQ simultaneously. But the main idea, or the main point of this video is to warn you guys to not fall into the trap that most retail traders do and, get short anytime you spot divergence, especially counter trend divergence. Be very, very careful. I don't even consider taking a bear div trade in an uptrend until we get something like bearish divergence and then a lower high, right? This would be the lower high, and that's where I would want to be entering, and that is a signal of a change in behavior. Just continuing to make higher highs and higher lows doesn't signal any sort of change, right? That's just continuation of the uptrend. So this is, a warning in a sense to retail traders that are doing things like this. Do not try to fade the trend. The trend is your friend until the end of the trend. I know it's a silly saying, but it's true. Just get into the pockets of the large players. Hop in there and join along for the ride is kind of how I think about it. We want to join the momentum. We want to have the wind at our back when we are trading, especially when we are trend trading. So I wanted to point this out to you guys. I'm not going to draw this video on super long. You can see here that both of these trades were over rather quickly into my recording because I hit the recording late. I had to restart OBS. But there is a lot to be gained from just considering how you can join the trend and not try to fade a very clear and strong directional move until you have technical evidence. For me, that technical evidence, once again, I'll pop over onto that ES example because I think that was an even better example. Do not short an uptrend until you get something like div and then a lower high. The lower high is where you get the juice for the reversal, right? Because that is telling us that buyers are not strong enough to continue to push price higher and make higher highs and higher lows. And that is a key. We will have lower lows sometimes in an uptrend, but a lot of times it's just reloading. It's bullish divergence inside the op zone, which is a really high probability long setup, okay? So just wanted to point that out to you guys. I hope it helps. I hope that some of you guys that have a bad habit of fading trends or trying to fade trends before it's time, take this to heart and hear my voice when you are thinking about shorting an uptrend or longing a downtrend. So with all that said, I was able to lock in about $1,500 in 3 minutes. You can see that I entered my trade here right around 7:34 a.m., which is 9:34 Eastern time, and then exited at about 7:37. So just a few minutes, and that was, the bulk of my day right there. Work smart, not hard. And that is what we do in the game of trading, and that is what we do at the Trading Network. So with that said, if you guys are interested in learning more about what we do here at the Trading Network, please feel free to check out thetradingnetwork.io, where you can find, of course, more information on our private Discord access, one-on-one mentorship with me, the proprietary indicator package, which you see a lot of here in this video today, as well as our Fundamentals of Futures Trading course, which is a comprehensive course that discusses the opportunity zone, which we also discussed today, as well as our ranging strategy, the momentum flip. It is very important to have different strategies for varying market conditions, and that is exactly what we teach in our course. You can also purchase access to the TTN Pro Trader Bundle, which is a bundle that includes the indicators, lifetime Discord access, as well as the fundamentals of futures trading. Check the links down in the description below, and you can find more information on those products. If you guys enjoyed this content, please feel free to like, subscribe, and click the bell notification as well to get notified every time we post a video. And I look forward to seeing you guys in our next video. I appreciate your time. See you soon.